Good morning, good morning. How you guys doing? Glad you could join me on this Friday. We're going to take a look at the markets, take a look at what has transpired this week, try to make sense of what's going on, and prepare us for next week. Yeah, a lot has taken place. Big drop in the euro. And the interesting thing is, if you take a look at gold, not dropping. Wonder why. Could it be that gold's maintaining that range that we were talking about? Well, take a look where it's reacting from on the daily chart. So I want you to pay attention to a few things here. Because when we do analysis, we always need to understand why things are happening. And we've been talking about gold for some time now. And I was telling you about the ranging that we were expecting on gold. It looks like it's doing another something in my eye here. Looks like it's doing another month of basing. You know, we originally said the month of May was likely going to be some basing. And now it's turning into June. The key thing is that we have ranging taking place up at these highs. And so it's a different dynamic than what's happening on the euro, which is why we're getting this push up in price. We're getting the push up here because demand was contacted, okay, within the range. So price wants to hold this range because that's what it's in the process of creating, is this range. So this is why we got this move to the upside, okay? Switching back to the euro, we had a different dynamic here taking place. On the higher time frames, okay, there's a totally different dynamic that's playing out here. Yes, we have ranging on the monthly chart, but there's a big difference between having ranging on the monthly chart and having ranging on the daily chart. Okay, we still have supply in play on the euro, on the higher time frames, and now we're having a breakdown of weekly demand zone. Okay, but I want you to pay attention to this weekly chart because we've had demand zones, supply zones, demand zones, supply zones, demand zones, all breaking. Where's the rhyme and reason for what's going on here? When is price actually going to hold a zone? It hasn't been holding anything. So the weekly chart is not a reliable chart to be taking trading decisions off of, in my opinion. And so the latest area that was created was demand, and now it's being removed. So there's nothing to hold up price. Okay. Does it mean that price is going to drop straight down? No, it doesn't mean that. Okay. Let's take a look at retail sentiment. See if we can get any gauge of what's going on here. Let's take a look here. Sentiment. Let's drag that up here so we can take a look, closer look here. And retail sentiment, let's see. Right now it's at 82% long at 46K. Whoa. 82%, 46K. So 82, 46. This is big. These numbers are big. 82%, 46K. You know, when you do historical analysis, and you look at the positions that retail traders have held in the past and what typically happens when they've held those positions, you'll come to learn a few things. And one thing I can safely say is that 82% retail traders are long, and they're at 46,000 lots. This is usually where we will start to see a reversal form, okay? Usually. Now, as you can see, we have demand a little bit lower, so could price be coming down to that area? That's possible. But what I'm saying is that with these numbers, there's a very good chance that we're going to be seeing price rally up. And what we do know for a fact is that this is the latest area where there was a significant imbalance formed on the charts, okay? Latest area. So could price be rallying up there to contact this imbalance so that price can drop? It's very likely. It's very likely. All I know is that if I was forced to have to take a trade on the euro, it would be a long. You know, you could drop it down to a 5-minute chart, and you could look at the dynamics of price and time things a little bit better than just blindly getting in. So I'd be looking at, let's take a look here. Looks like this area down here looks pretty good. So I'd be looking at areas like this. Even potentially this area here. Yeah, I've been looking for areas like that. Watching for momentum to shift and then going long. I like this area down here better. Okay. But this could be a really nice long trade because of the retail sentiment setting things up for us here. Okay. Like I said, you know, 82% at 46K. That's very aggressive for a reversal. Let's look at the pound and see what it's at. Pound. There we are. Not as aggressive at all. And look at the chart. Let's see. No. It's dropping just like the euro. Yeah. Pound is dropping from that daily area of supply here. But the sentiment is not nearly as aggressive as what we're seeing. Let's look across the board. So euro, very bullish. Pound, middle ground. US dollar, Japanese yen, not really. US Swiss, US CAD, very bearish. Very bearish US CAD. Let's take a look at US CAD. Interesting. So US CAD is 80% at 6,000 lots, 6.4. 80%. 6.4. 80%, 6.4K. Yeah, I don't know if the volume is quite there. Going back to May. Yeah, it's not quite there. When you look at historical volume, look where it's at, okay? Look where it has been. And you can see that decline that took place here, okay? This was, 12,000, 13,000 in volume. We're at half of that right now. So it's not nearly enough to cause any significant movement. So it looks like only the euro is aggressive in positions in such a way that would cause a shift in price. Okay, so I'd be paying attention to that going into next week. All right, potential rally from these lows. All right, the gold or silver, yeah, still holding that range. Okay, still holding the range. Gold and silver holding that range. Euro was the only one that got a significant drop down. Yeah, so be prepared next week. We're likely going to be seeing a push to the upside, and you that are out there that like to short-term trade, I'd be looking at the lower time frame charts. 5 minute, like I said, is good for momentum shifts. Okay, look at the demand coming in right now off that area that I drew here. Okay, we could start seeing momentum push up here. Like I said, I like this area down here a lot better. So if it would come down here, that would be a good spot to base long trades off of. Yeah. Go back to the 4-hour chart. And let's quickly look at those yen pairs that we were looking at the other day. Aussie yen pausing at the highs here. Let's look at CAD yen reacting to that supply early this morning. Euro yen. Yeah, it got a nice drop from that supply, didn't it? The supply that we were talking about up here. Nice drop towards the ascending trend line now. Weekly supply contacted as well. What pound yen? Reacting to the downside. Yeah. Yeah. Big drop too. Let's look at the US dollar Japanese yen. How about that? Oh, we got a nice spike up. But again, spike up into supply that we have drawn out here on the weekly. So, you know, over time, we're expecting a push to the downside here. Yeah, so it's looking pretty good. Looking pretty good. Dave Davidson. Hello, Kevin. Thank you for your great information and knowledge. Yeah, you're welcome. You're welcome. So, yeah, I should remind you guys, yesterday was the last day for entries for the scholarship, the school scholarship. We've received so many entries. It's unbelievable. So many positive feedback from you guys, which is just incredible. So I want to thank you all for taking the time to submit your testimonials and your requests. Really humbled by the amount of response and the amount of people around the world that want to join our school and learn how to trade supply and demand from us. It's just amazing how many people we've reached out and made impacts on those people's lives. It's just incredible to hear the stories that you guys share with us. Truly amazing. So I want to thank you again for taking the time to submit, some of you, multiple page emails with information about your journey and how you found us and what you've learned from us and how we've changed your trading. You know, how you've come across so many other people online that were nefarious type of people and didn't follow through with what they promised, and the content wasn't what what they were saying it would be, and how glad you are to come and find our school with what we teach and how it's the real deal. You've never seen anything like it, and so we really appreciate you taking notice of the years and years of hard work of putting something together. I mean, I built a school around what I would want. You know, when I first started to trade, I thought to myself, what would I want in a trading school? What would they teach me? How good would their analysis be? What kind of concepts and principles, you know? It would have to be based in truth. It would have to be based in reality, not, you know, things that are, you know, your moving averages, your Bollinger Bands. Yeah, everybody's done that, been there, done that. And it's, you know, like I've mentioned before, it's not based on the reality of how the market moves. So when I was seeing everybody trading all this nonsense, I thought to myself, isn't there like a place I can learn how to trade, like how the market really moves, like the institutional order flow, how they accumulate positions, how are they messing up with retail traders and making retail traders emotionally trade the wrong way? How are they convincing traders to get long when they need to offload their positions to them? You know, there had to be reason for everything. It wasn't just a coincidence that the banks accumulated a massive long position on gold 4 months ago, and then now they need to offload it, and then all of a sudden the media is talking about how you should be buying gold, or there's a war breaking out in the Ukraine. So coincidentally, there was no way that it was all coincidence, because when you see it happen over and over again, you know that there's a system that's been put in place to facilitate that. And the wonderful thing is that if you study charts and you know what to look for, and you have concepts and principles to apply to the charts, so that you know how to draw the institutional supply and demand, you know what supply and demand is, first of all. A lot of people are just drawing zones left, right, and center. I see all over the place, and it's comical, really. You have to know what you're doing, and not every imbalance is a supply and demand zone. There's reasons for that. You have to know how to draw the trend lines. There's reasons why we draw the trend lines the way we do. We have very specific rules on how to draw the trend lines. And so, you know, the word's getting out. People are finding out about us. They're realizing that what we do is the real deal. And we really appreciate the support that you've been giving us. And so we'll be sifting through all of the things that we've collected from you guys. And we're going to be looking at the support that you've been giving us, the likes and the retweets and all that good stuff from our social media. And we'll be selecting a winner very soon. Father's Day is what we're banking on, but the amount of submissions that we've had, you know, we don't want to rush the process. So we're going to work really hard and diligently to get that done by Father's Day. So, yeah, again, thank you very much. We'll be doing more in the future. And some of you have asked about the level 2. When's the level 2 class coming? That one will be coming out shortly. We just want to wrap this up first with this scholarship and all your submissions. We want to focus on that. And when that's done, I'll be setting up a new level 2 class where we will be getting a lot deeper into price action, not just supply and demand and trend lines, but trends, price structure, key zones, the major role that key zones play in the market, magic zones, where to take trades off of, a lot of good stuff. So thanks again. Enjoy your day. Enjoy your weekend. And we'll talk to you soon. Take care, everybody.